So there's this Nini, like I was saying, there's this thread you did about financial investments, and I remember you said that the best one is the money market fund, MMF. You put it as number one. I don't know if you put them in orders, but ukona sema it's low risk. So yes, let's start with that MMF, ni money market fund.
Yeah.
Yes. Why is it a good investment?
Okay, maybe just a point of correction. First of all, okay, it's not the number one investment, but I think it's the starting level.
Yeah.
It's like
starting
the
level
class of investing. Yeah, maybe the PP1 of investing.
Ni PP1
It's like
investing.
the first step of investing.
Yeah.
So the first step to investing is saving. Okay, it's earning money.
Yeah.
Not saving money, because you cannot invest money that have not saved.
Yeah.
Because savings is the difference between your income and expenditure. So the first step is savings.
Yeah.
If you look at how people save money, or how the common person goes about savings, most people just save their money in bank accounts. Whereby your money is earning. There are some bank accounts that even will give you maybe 1%, less than 3% per annum, which is very low, because these banks are using your deposits to lend money to businesses and to other individuals. And right now the lending rates are as high as 16, 17, 21%.
Okay.
So you can imagine these banks are making 21%, they're giving maybe 3% or less. Which is very unfair.
But it's business.
You could do better. So the basic of a money market fund is just like a saving account. So it's just a pooled. Okay, so maybe just to explain what a money market fund is, it's just a pooled investment firm, or maybe what you call a mutual fund, whereby different investors bring their money together, and then they give that money to a fund manager. Then the fund manager is this professional who looks at what asset classes can invest in this money, so that they can give the investors a return. And now in the case of money market fund, this fund manager, as regulated by CMA, has to invest in low risk avenues. These include treasury bills, treasury bonds. We also have fixed deposits, called deposits, demand deposits, such kind of investments. And the good thing now about a money market fund is that your savings will get a decent return on investment. Because now right now money market funds are giving maybe from 12 to 16%. Compared that to a 3%. That's a huge difference. The first step to investing is to beat the inflation rate. So inflation rate in Kenya it's between 5%, 7.5%. So your savings account, there's no way to ever beat the inflation rate. But now with the money market fund, you are doing it very easily. It's very low risk. You can easily access your money within 2 days of asking. So I think it's the first step to investing. You have to accumulate your savings in a decent place.
But sasa swali ni hii money market fund naipata wapi? Because saa hiyo ndio swali watu hujiuliza. I think Safaricom has Mali. Is it Mali?
Yeah, Safaricom has Mali, which has I'm not sure if there's a time when they launched, they were accepting investors up to a certain level, then they what do you call it, then they stopped accepting investors. But I'm not sure if they have resumed, but we have quite a couple of options. I think we have 25 fund managers in the country right now. And they're all offering money market funds. 25 fund managers. Offering money market funds.
Ni kama gani na mtu anazipataje kwa phone? Because hiyo ndio kitu niko sure sasa niuliza.
So
kitu kayo unapataje kwa simu?
So maybe there are some like CIC, which is the largest. Which is the largest unit trust in Kenya with a market share of more than 30%.
They're called
CIC.
CIC. Okay.
That's a household name.
Yeah.
But that's like Sanlam. Okay, if you just go at the threads that I do, or maybe the links that I share, you'll find links that I share. You can sign up. So you just sign up like a normal account opening forum, whereby you just put in your details, your KYC details, you upload your documents, and then maybe after one working day you'll get an email your account is ready, then you can start funding your account.
So you need CIC bank?
That's no CIC asset management and under CIC group.
Then
we have Sanlam, we have others like Kuza. Even nowadays most banks are entering into asset management, so they also have money market funds. But maybe they aren't as big as what asset management companies are.
Okay. So that's the Nini, because I think even one of those things you said was very interesting, where you're saying like their returns were between 18 to 21%.
No, between 12 to 16%.
Or 12 to 16%. Because let's do like some some basic mathematics, like very quick. Right now, if you were to guess, how much is a 3-bedroom apartment in Langata?
3-bedroom?
Yeah.
In Langata?
Yes.
Apartment?
Yeah.
Buying?
If you're buying cash.
I would say
if you have to make a wild guess.
20M.
Sindio? So let's look at it this way. I used to live in an apartment Langata. and it was a 3-bedroom, and I used to pay 30,000 as my rent. So 30,000, if I take this 30,000 times 12, that's 360,000.
That times 12. Yeah.
Yes, 360,000. 360,000, if I'm to then divide it by 20 million, if this person bought this for 20 million, you see now we are talking about, is it 1.8%?
Maybe you could have used 500,000.
Yes.
Yeah. 20 million, that's...
Yes. If it's 500,000, 500, okay, wacha tuanze na hiyo. Okay, so 20 million, 500,000, yes?
Yeah.
That's 2.5%, ama?
2.5%.
Yeah. Yeah? So that means the whole year mtu hii pesa yake iko locked na anatengeza 2.5%, unless nimefanya hiyo calculation wrongly, ama?
Maybe we can
Okay, wacha tuifanye like tutoe 03 tutoe hizi 03 tutoe 03, si ndio? So tulikuwa na 500, so tumebaki na 500 over 20,000, si ndio? Then tutoe hizi 02 tutoe 02, so tunabaki na 5 over 200, which is 2.5%. So unaona, when you tell this person that this house is not a good investment, the fact that you're going to rent it out, and don't forget, rent is never guaranteed. The tenant can end up in problems, and pesa yako imepotea.
Okay, so if you look at the real estate market in Kenya, I think one of the main reasons I've been trying to say it's overhyped, so maybe it's not a good investment, is one, it's in terms of the returns.
Yeah.
Because I think we even had a Twitter space sometimes late last year with some real estate experts. One was Tim Kipchumba, the other one was Nahash Nokawa, who are very trusted real estate experts in the country. And one thing that we all agreed on, or maybe one of my pointers that real estate is overpriced, is that you can hardly get a real estate project giving you north of more than 10% in returns. Even 8%, it's a lot. Most real estate projects will give you between 6 to 8%. Yeah, and if you look at the other asset classes that we have in the market, even a money market fund is giving you 12%. T-bonds are giving you 18-19%. And then stocks maybe in the long run can give you even higher returns than that. Yeah. So, okay, yes, they always say that there's also the aspect of capital appreciation. Also, you attach the capital appreciation with the rental income. Because, if your house, maybe if you bought the house today at 20 million, maybe in the next 5 years the house will be worth maybe 25 million. So maybe there's that aspect of capital appreciation.
But who will you sell it
added with the rental returns? But what?
Because if there's a ready market for the house, maybe. Because pia kuuza hao ni ngumu.
And also that's theoretical, because you always assume that maybe the time you are selling, that maybe that house will be worth more than it's worth right now. But if you have, I'm not sure I think I've seen a report whereby land prices or even house prices have gone down.
Upper hill especially.
It can happen. So there's also that factor. And also the other thing about real estate, by the way, and land, is that most people don't buy these houses cash. They take bank loans to finance real estate projects.
And the bank loans uko ni 20-25%.
Now
so
you can imagine
ridiculous rates.
Now you imagine, let's take a case of you. Maybe you have 10 million cash right now. You are looking at the investment options that you may have. So you may find maybe someone saying, okay, I have 10 million right now, maybe I can build some real estate property, maybe worth 20M. And maybe I can, that's your understanding, that's your knowledge, that's your level of financial literacy. The only thing you're eyeing on is real estate. So you have not considered the investment options. So you'll end up taking an extra 10 million loan and at very crazy rates. Unless it's maybe from a circle that maybe has maybe lower rates, or even 12%, it's still high. Assuming, because the returns from real estate may not surpass that 12%. So you can see yourself now, you'll find, okay, I think I've even shared cases of this where clients come and tell me, okay, it's not that I'm struggling financially, but I brought these problems to myself. Maybe taking on a real estate project that I never had the cash to finance, so I had to go to the bank for a loan. And now you are living comfortably, but now you bring discomfort in your life, because now you have to meet you have a real estate property. And now you have to look at you have already even finished it, but now you have to look at the occupancy rates. So if you look at most real estate projects, the occupancy rates, okay, there are some with 100%, but 100% is very hard. It's not normal. Most are at 60, maybe 70%. Also maybe depending on location.
I think the ones that are 100% are where the rates are below the market rate. You understand, like the rent is not super expensive.
Yeah, and also Pia, there's also a factor of brand. There are some real estate developers who have got very good names out here.
Yeah.
So whenever they put up a project, they always get clients fast enough, even before maybe they have even finished the developing stage. But what I was just trying to say is, if you look at the returns, okay, I was talking about the point whereby this client is bringing some discomfort into his life, because now you have to now you have extra headaches now. You have the bank loan that's struggling, you're struggling to pay, and now the bank loan depends on the occupancy or maybe the rental income you're getting from this real estate project. But now there are no clients, and also some clients don't pay on time. Also there are some repairs and maintenances that we'll have to do. Okay, some will say that some repairs clients will pay, but okay, what about the sewage that blocks? Who will pay for that? Who will pay for that? Yeah, maybe security and all those other expenses that come with it. So I think for me, okay, we always say personal finance is very personal, but for me, I've always found real estate to have a lot of headaches for me. Well, even if you can, yes, you can outsource the headaches. But okay, why then go for the low returns?
Because Sunday it's interesting. Sunday nilikuwa naenda home na a distant cousin of mine, na akacheki kwetu. Unajua sasa Kabete is now opening up. Sasa ni kama ni decongestion plan ya Nairobi County. So unapata wase wengi wanajenga these flats na nini, wale wase wako na shamba zao. So unapata for them to kujenga kitu ina attract, guys living middle class, to say middle class, una spend around 100 to 150 million on a flat. And then average rent your area for a 2-bedroom it's like 30k. So say ile do ataka how long do you anze kurudisha?
It's ridiculous,
all this money. So kuna hiyo fascination
but I think maybe atangalia hiyo kani 30,000 volume, like how many flats does he have?
Sana napata like I don't know 15 20.
So maybe atangalia hivyo, because kani let's say it's 15, that's 450k. Alafu maybe anaangalia in 1 year, that's 9M. So anachukua 20 years amerudisha dola. At least now.
So nilikuwa namwambia like unless sasa anaingia hapo tuseme, if kama naingia kwa project kama hiyo si yangu, I'll never enjoy the returns. Maybe my kids.
Actually most people say that real estate is a long-term project, it's a long-term game. That's when you'll see the real returns. And so they also say that it's the best form of passing on wealth maybe to your kids, to the next generation. Because real estate, it's a 30 years project. So
Okay.
It makes sense in a long-term perspective. Long-term view. But for the average person, if you're looking maybe to build your wealth, also if you're focused on returns, I don't think real estate is the place to be. There are so many asset classes that can give you better returns and lower stress levels than even that real estate. Because now you can imagine, now you have to deal with clients who are late to pay rent, you have to deal with repairs, you have to deal with a lot of things. But now if you just bought maybe a government bond, yes, guys are saying that the government has a likelihood of default more so recently, but bonds have been relatively low risk from many years back. Because our government of Kenya has never defaulted. It's not like governments of other countries who are known for defaults like Argentina and other countries. But yes, times change, but I still think there's a lot you can do. The asset classes that real estate for the average person who is looking for returns, and also who is looking for an easy, not actually an easy way, but a better way of building